There seems to be a date in a crypto cycle where we flip from a bearish sentiment in a bear market to the beginnings or the precipice of a bull market where we start to see volume pick up and ultimately more and more investors come in. And what tends to happen is we can actually start to see these bottoms forming where ultimately is a good time to put your last positions in. And guys, not to give the whole video away, but this date is coming up very, very shortly. And today I'm going to give you all the evidence you actually have to know and need in order to justify this and then start to make a decision based on that accordingly. So I'm not going to waste any more time here. Let's jump into some of my reasoning and have a look at the chart. Now, as you can see, quite obviously, this is pretty intense, but I'm going to break it down very succinctly for you so you know exactly what is happening. Now, I want to take your attention to the top here. So crypto works in cycles. We should all know this. And typically the cycle starts at the halving, where Bitcoin's pretty much demand halves, right? So the block reward given to miners for getting the block is halved by half exactly every 4 years. And this typically creates some pressure in the market, right? Supply shock. But typically people, as you know, the general population tends to see this data and go, oh, you know, the bull market's starting, let's all get back into crypto. So it actually happens a little bit before, not exactly on the halving, but this is a good indication for us. Let me just take you through this process step by step first, then we'll get to the real meat and potatoes in just a second, right? Some of you should actually already know some of this stuff. So, okay, the first Bitcoin halving that occurred was back on November 28th, 2012, right? That's where Bitcoin's block halved from 50 down to 25 the first time, okay? And so what actually happened was, and you can't really see it very well, but the very tip of this bull market was in December the 5th, 2013, and we actually had a 16 billion market cap. So actually, we are 123x from the halving market cap to the very top of that bull cycle, right? And that actually occurred over 372 days, or almost to the day 1 year. Now, that's a good indication of where things are heading, and we're going to use some of that in just a second to support what day we're looking at in the future. But even more so, okay, we fast forward one cycle to 2018, okay, and the halving in this case was July the 9th, 2016. Now, at that point in time, the market cap, the global market cap itself was $12.6 billion. And what we saw the global market cap become at the tip of the 2018 cycle was $800 billion, as you can see here, right? I'm just going to cancel out some of these because I don't want the chart to get too ugly. But what happened here was we 63x'd. Okay, so from this point in time to the top of the cycle, we 63x. Now, that actually occurred in 548 days, which again is almost to the day exactly 1.5 years. Interesting, right? But from kind of like this here, so this 123x, I also want to take your attention to the difference between the explosive power of these two bull markets. We actually lost about a 2x in, you could say, demand or explosive power. And that's simply because when the bull markets kick off, what happens over time? What happens in the bear markets? Well, because we have more people involved and we start to gain a wider audience and more, ultimate long-term demand, well, we form higher lows, right? So this point in here, or essentially this point, right, is different to this point. Same halving, okay? And it sets get higher and higher and higher. And then over here, of course, we've got a halving coming up soon. And look how high we are up, of course, from, the 2020 halving, okay? So yeah, we're just pretty much forming higher lows. That's essentially what it is, okay? So then we fast forward to the last bull market, okay, the 2021 cycle. And we saw the halving actually occurred in 2020, right? May 11th. And I'm pretty sure the block reward went to it's right now at about 3.5, okay? So what happened was the global market cap was $252 billion, and we 12x that to 3 trillion at the very, very top, okay? Now, again, we've actually lost 5x in explosive power here. So you can see we're starting to get more and more diminished over time. Don't let these multiples confuse you. These are minuses, okay? So we're losing explosive power because, again, we're forming higher lows when the halving actually happens. But the really interesting thing that I found, this actually blew my mind. I had to triple check this. The moments where the halving occurred to the top of the cycle actually happened exactly in both of these last two cycles in 1.5 years, or to the day, 548 days. Now, as we should all know, history doesn't repeat, it just simply rhymes. So I'm not going to say the next cycle we're definitely going to see 548 days from the halving, but this for sure is a good indication as to where we can start to see, the top of the next cycle being top of 2025 cycle. So as most of us should know, the next halving on the agenda is April. We don't know the exact day, but roughly April sometime. I'm going to use April 1st as like just a rough estimate, okay? So, you know, if we take this date into consideration, we should see the top of the next cycle occur on about October 30th, or again, around about, probably, you know, in November. So this is interesting because now we can start to take not just what I'm about to tell you in this video, but our price predictions in general to go, okay, well, maybe we should look at the circulating supply of our favorite tokens to accurately price predict, right, in about October, November 2025, which is interesting. So again, it's also pretty good to know roughly when the top might actually be. Nothing's guaranteed again. But what we're going to do is, so we're at this point right here. This is where we currently sit in time. And so if we fast forward to possibly when the halving happens, I'm going to estimate that we're roughly going to be at the same sort of global market cap at about 1.1 trillion. But if we follow the current trend of losing explosive power, what's next? Like a -7 or 8x? But that wouldn't make much sense, because if that actually happened, our market cap wouldn't go very high. We'd be lucky if we got the same market cap as what we did back in 2021, right? 3 trillion. And again, that doesn't make any sense because, of course, if you follow that trend, we're probably going to only 2 or 3x the 1.1 trillion at the halving, which is just not going to happen, okay? So I believe we'll start to now see this pivot, right? This inverse of our explosive power starting to diminish, as in the reduction diminish, and it start to gain more and more. Why? Well, because down here, I believe we're going to actually start to see the precipice of institutional demand and national demand, right? So we had pretty much retail speculation, you know, just people like you and I buying crypto for the last few years. The last bull market, we could probably say comfortably that we had a little bit of enterprise involvement, about 5%, but I think the next bull market will start to see 20%, and obviously these guys have more money to throw around. Therefore, I do think that the general consensus is about correct, right? I think we'll see about a 5 to 10 trillion dollar market cap, which means we're going to probably 5 to 10x from the next halving. Again, I'm going to presume the next halving, we're going to be around the same sort of market cap as where we are right now, because if we just take previous bull markets from pretty much equally where we are right now, they typically are about the same. So they typically, you know, sit about the same until that point in time. But the question is, right, so now we have all that under control, and you guys are pretty well aware of the halvings and kind of time frames here and roughly what we're looking at. So what's the date, Kyron? You know, what's the date we're looking at? Because ultimately this all just is pretty much just basic market stuff. Well, let's zoom into these time frames right here. Let me just change my pen color really quickly because this is definitely going to get very, very confusing. So I've tend to use these time frames here. So where you see these charts, I've tried to enter them exactly at the time frames they're in. So we'll see here that this time frame is roughly going to be starting at about the 5th of December 2013, which was the start of this, or the sort of top of this bull market, right to about the 1st of January 2017, which is halfway between the, you know, the subsequent bull market and, you know, the halving and the top of the bull market. Hopefully you guys are following so far. And so what we can do, if we zoom in, right, because obviously this data here is, you know, we can't even see it. It's too skewed. If we zoom in, what do we find? Well, one thing I want to look at is volume, the 24-hour, the trading volume in general, because that obviously is an indication there's more demand starting to pick up. And what we find is, if we look down here, this is pretty much when we had the halving, right, started. Well, from the point the halving started, if we look where demand actually starts to pick up, it roughly starts to pick up 14 months before, all the way over here. Now, again, this is going to look quite skewed because we're including this trading volume over here, which of course, as we should all know, skews all the previous volume. So definitely did start to pick up at this point in time, so 14 months prior, but where it really started to pick up was 8 months prior to the halving, as you can see here. And then from there, obviously, we had the bull market, right? I'm not obviously showing you that's the bull market here, right? So we're kind of missing this information, but it definitely obviously was a bull market. It started to pick up a lot more. So yeah, this is a very important thing to look at because we can go, right, well, this is what happened way back in 2016 and 2018. We started to see 14 months out, there was more demand come in from the halving. And then 8 months out, it was getting more and more intense. But you know, if something happens once off, it's not really like this is kind of a trend. It's just like, okay, that was a once off. Maybe we can use it to somewhat predict what might happen in the future, but no one's going to really hold on to that. Fair enough. But we fast forward over here to the kind of the last halving that actually occurred, which was May 2011, 2020. So if we zoom in between the very top of the bull market in 2018, so this point here, if we just bring this down right to here, and then kind of, again, the 1st of January 2021, so right in the middle of, you know, this bull market here. We bring it down, it's about these points right here. So again, I'm kind of messing this up a little bit. So yeah, the top of the bull market to midway through the subsequent bull market, right, that we just had. And what we actually find is the same sort of thing play out, right? Here's the halving, And what happened 14 months out? Look at this. Demand started to pick up. Again, remember, keep in mind, things are skewed because we're talking about including all of this volume right here. So it starts to get a bit messy. But then again, what happens 8 months out? Well, it gets even more intense until the halving happens. And then we start to see the bull market. Again, the bull market kind of kicks off in between these ranges here. All right. So again, now it's starting to make a little bit of sense. Now, it didn't just happen once. It's happened multiple times now. So in my opinion, what am I thinking to myself? Well, we can start to add all this information up, everything I've told you today, to figure out when we should have our last positions into the projects at all, because demand's going to pick up, right? We obviously want to try to get as low as we possibly can. Dollar cost averaging is ideal because there will be a point in time, in about a month or two period, where people will start to enter into the market. Because as we know, the halving kind of attracts people, but most people try to front run important events like the halving. So again, we're here right now. So if we just bring this down, it's kind of like what I've tried to do here is, of course, do the same thing. So work off the previous bull market top, which again was November 10th, 2021, until today's date. All right. And so if we obviously bring this out, well, what happens? Well, again, if we're going to take April 1st as when the next halving happens, we go 14 months out, which is February of this year. So it's been and gone. So February 14 months out, it is what it is. We'll talk about why the volume looks kind of weird already, but we'll get to the meat and potatoes first. And then so 8 months out, we begin to look at August. So August, in my opinion, is like that month where we start to go, okay, maybe we should have our positions in, because I believe anywhere between August the 1st to August the 31st, and even into September, is when we'll start to see demand pick up. So to answer the question, I'm saying August to September this year is where we will start to see demand start to come into the market a little bit more. And I think that actually coincides with a lot of people's predictions of what's going to happen next. Now, that's not to say, I'm not saying that we're not going to see a downtrend at all, or a sudden event that happens that's going to crash the price. But this typically is the point in time where people, based on history, have started to come into the market. Now, again, to answer the question, Kyron, well, why haven't we really started to see, demand pick up in the last, since the start of the year, basically February till now? Why is this looking kind of weird? Well, two reasons. Again, one, because we're not including all of what's to come in this chart here, okay? Because it's going to obviously skew everything. It's going to skew this as to look kind of like this, right? It'll look kind of weird. But also, we have to remember, there is peaks and there is troughs, right? So there's points in time where there's less demand, and there's also points in time where there's more demand. So again, history just doesn't always repeat exactly, it rhymes. So I'm not saying this is the be all and end all. I'm not like plan B saying, hey, this is the cycle we're going to follow based on fear and greed and blah, blah, blah. I'm just saying, guys, what I kind of concluded from this information was based on the halving and based on kind of what is to happen next. Jesus, chart looks so messy when I zoom out. I strongly believe, I am of the opinion that I am actually going to have my positions in now over the next coming 2 months. So my previous thoughts were we're going to see more sideways action, a lot more downways movement, but in my opinion, I'm actually changing that. As any good trader or essentially investor does, they don't stick to one thing and hope for the best. You got to kind of move with the times. And moving with the times here is very important. So yeah, as I said, I have about $20,000 to be completely candid off on the side to invest. Okay, and I was going to hold off on that for a black swan, or as I said, I believe we're going to go a lot lower than what we are. But based on history, and again, just extrapolating the information, I think that I'm going to start putting more of my positions in just to be safe. But again, leaving about 10% off on the side, just in case we do see a black swan. So again, to summarize, guys, history doesn't repeat. It does rhyme though. And after finding this information out, I've concluded that we are at the precipice of the 2025 bull run, but real demand won't start to build until August. Again, August to September, and it's just going to go stronger and stronger until April, which is the halving. And that, in my opinion, is when most people start to get in, right? When we see the people that leave crypto for the bear market, they start to come back in again. But of course, they try to front run the news, so they'll be in a little bit before, and that's where we start to see a hell of a lot of demand tend to pick up, guys. So just to say once and for all, you need to look at April as the real kickoff point here, but definitely have you positioned in my opinion, not financial advice, over the next couple months. Guys, thank you so much for watching this video. I really hope you have enjoyed. And if you have, hit the like button and subscribe for more daily content. Until next time, talk to you soon. Bye.